Hey traders, what's happening? Jamie Setley here. It is October 4th, 2018, midweek strategy webinar. And we got a lot of vol here, notably in equity markets. And I guess you could say probably in dollar yen. But yeah, welcome to the more active trading part of the year, fourth quarter. So first of all, can you guys all hear me? Can you see the chart? It's all good, says Peter. All right, well, if Peter says it's all good, then it's probably all good for everybody. We're going to start off this webinar. We're just going to, I just want to head over the 10-year yield chart real quick. And then I actually want to look at a number of equity indices before we dive into FX. Okay, so laid out, we did talk about this last week, but then laid out last night in the update the importance of, roughly 328 in the 10-year yield, right? So the big story in the markets yesterday in the U.S. during the U.S. session were the massive decline in U.S. Treasuries across the curve, right? So bonds decline means rates are going up, and that continued overnight in excuse me, in other markets. So you're seeing a worldwide global sell-off. I will say from a from just kind of an observational standpoint, yesterday my Twitter feed was just blowing up with comments about the decline in bonds, and the rise in yields, same thing, right? It was like, you kind of get this when you're on Twitter. I call it the 21st century trading floor. You start to notice, the frequency of comments about a market. A lot of times, it kind of tells you that you're at some sort of or nearing at least a short-term kind of sentiment extreme, if you will. And that was certainly the case yesterday with the bonds. So really pay attention to this level up here with the 10-year 328. We've already started to see the other markets, start to diverge here some, right? So you did see, I showed the chart yesterday, a 10-minute chart, say, of dollar yen in the 10-year. So like this is the 10-year, which is now 320, right? So we're getting really close. 320 now, an 8-point move is a big move, right? So we're still a little far away, but we've already seen the other markets start to diverge. Like, for example, dollar yen, right? Dollar yen's already started to diverge. Dollar yen started to diverge right at the close yesterday, right? So this has already started to happen. Maybe you go into that final push into 328, and I just kind of put a comment on Twitter. We are into the short-term support now for dollar yen, right? We've got the median line and stuff. We'll obviously look at all these charts here in a bit, but if we do go to 328 or thereabouts, or at least a little bit higher in the 10-year, I do think that maybe dollar yen stabilizes a little bit, and maybe we do form a little bit more of a defined topping pattern here, in dollar yen up here rather than just straight down, right? So looking for stabilization bounce relatively soon, probably in dollar yen. May have already started to happen. Again, the median line is a tad bit lower, so we will look at that in just a minute. Point being is that a lot of markets are starting to trade. The story right now is yield, right? A lot of markets are trading off of yield. Okay, we could look at crude oil too, right? So crude oil, very similar. All right, talked about this last week. The move in yield, the move in crude, kind of saying the same thing, right? Whether it's inflation, whether it's growth, whatever, they've been moving together for the most part, right? So if we've got all these markets kind of trading in a similar manner, then it makes a lot of sense to really hone in on the market where that everybody, where all the emotion is. And I do think right now that is in the treasury market. So again, just keep that TNX. That's the symbol for 10-year yield U.S. Treasury note 10-year yield. Keep that kind of up. I kind of want to know, really on an intraday basis where that is, right? I want to know if we get 328 and Twitter's screaming like crazy, then watch out. You're going to see some reversals in other markets. And again, we've already started to see the reversals in other markets, but it is a process when it comes to that, not just a straight line, straight up, straight down shot. All right, so there's my spiel on the 10-year. Again, if you're looking at TLT, right, which would be if you want to trade, maybe trade this idea for a coming reversal in bonds, pay attention to this longer term channel, right? So this is the channel from 2007. This should be your 25 line of that channel. And we're getting close, right? It's about 112. Oh, by the way, 112 is exactly 50% of the rally from the 2004 low. I just noticed this last night as well. Look at that. I don't have 50%. 50%. There you go. Look at that. 112.06. So thought that was interesting. All right. All right, let's move on to other stuff. So I said I wanted to look at some equity stuff, right? Longer term equity indices. So why don't we take a look first? We'll revisit a chart that we haven't looked at in a really long time. This is the long-term Dow chart, right? This is the chart that goes all the way back to the 20s, okay? And we have a channel that's formed in center line and all that good stuff. But if I zoom in weekly now, okay, this parallel, remember this one up here where you topped back in July of 07, you had the big drop, formed support on that parallel, rallied to a new high and stopped on the parallel that we stopped on before. We literally had the same thing happening right now. Look at that. This is the Dow now, right? January, dumped, found support in April on the line, found support on the line again in late April, and now we're nearing that level again, okay? So what I'm getting at is that we are some really long-term resistance here, right? You've gone to a new high, yes, in the Dow, but at the same time, we do have the parallel resistance, and this is really long-term stuff, which at times it's incredibly precise, right? So yesterday we went up through not quite 27,000, 26,952. The line is about 27,000, so didn't quite get there, but very close. And we're looking at some shorter term charts. Let's look at the Qs. Let's look at the NASDAQ. All right, so here's the Qs. Okay, first support more or less hit 185, what did I say? 182.30. So no, sorry, 182.90s, right? Yeah, that's the high from there, 182.93. So the low here today is 182.96. As long as you're holding above this, I don't want to get like uber crazy bearish yet. For me, the important break probably have to be below the median line. But again, we would watch this on an intraday basis, right? So, I mean, it's hard to argue with how great these slope lines have been. You can see the beautiful resistance, okay? And now we're coming into beautiful support. All right, this has been support since August 15th. I mean, it's that simple. Okay, it's literally been support every time you've hit it. You know, a hair above it here at the morning low. I have a feeling that it probably tries to get hit. You know, you would think at some point, either today or tomorrow. You know, rather than just a V bottom, you're probably going to do something like this. So, look, just follow the lines, right? Don't try to predict on a trading basis. Just follow the short-term behavior and let it lead you into, the bigger swings. So, it's up here, it's obviously, be bearish unless you break above it. Down here, be bullish unless you break below it. All right. Now, what would make me outright kind of like a bear, like on a trading basis? Well, I was a bear here. I'm flat here. But from here, it's wait and see, right? So if we do break below, and then you start finding resistance on this, then I think you would look for something on the downside, right? It's all about understanding the short-term behavior, in my opinion, especially when you're getting into kind of these big decision points. So the Qs are the ones that I'm focused the most on at this point. Again, that's where the biggest companies reside. Your Apple, your Amazon. That's the one that's had the most, inflows. That's the one that's kind of been the biggest story. A lot like the 10-year yield in that respect. Oh, I got alerts going off here, and that sound is terrible. So there's a alert going off on Box. This is it's a stock that a Dropbox. All right. Anyway, at a big level here. So watch Box down here. All right. SPY. And again, the ETF, I'm following, so I'm looking at the ETFs. Like this, I could look at SPX 500, which would be here. But I've had much cleaner levels with just the US hours. So that would be like this, like SPY and QQQ, right? So SPY, much like the Qs, your support is probably a little bit lower. All you're doing is we're looking at the channel lines here from the April 2nd low. That's it. I'd say this has been pretty good. Do have a weakening structure here, right? We've talked about we have space. They're like kind of gaps, right? Space. You didn't make it to the upper parallel back here. You dropped. You didn't even make it up to the horizontal high up here. So yesterday and the last couple of days. So that's a very weak structure. So here I'd be more kind of inclined to respect potential for a break to the downside. Okay. But that, I just put on Twitter about, 288.60, 288.70, something like that. Over the next couple of days would be where you'd be, looking for paying attention to potential for a bounce. Okay. Again, we bounced here in August, right? The 2nd and the 15th. So, heads up. For me, the market, the behavior of it really starts to change once or if you drop under the center line, okay? In fact, this is a really good example back here of what I'm talking about. So about understanding the short-term behavior. See, when you broke below here, you came back and then you found resistance. That's a short, right? Now look, market ended up going back above it. That's fine. It's not saying what's going to happen over the next day, week, month, or whatever, but it's something to look at on a short-term basis. So look, if you can pay attention to, this one line, then you've got an edge because you know that if you break below it, come back to it, it was support, it's been support, look for it to provide resistance, okay? And that is it when it comes to that. Okay, that is, all right, so SPY, QQQ, I want to look at the Nikkei as well. All right, so here's the short-term Nikkei, okay? This is a daily chart, just the channel from the March low, and this parallel nailed it, okay? The parallel from the June high. very similar to dollar yen, right? In the sense that we probably want to be paying attention to the median line. And if I just get a little more color on this, right? Your median line was actually resistance a number of times. So it is important to look for it to provide support. It would be anyway, but it's especially important now. So that's going to be around 23,650, and that's only 150 points in the Nikkei, which, you know, as we know, the Nikkei is like nothing. That can happen very, very fast. I mean, look, it's down 480 points right now as I'm talking. So 150 points is a sneeze. It's like a hiccup in the Nikkei. So pay attention to that level right there. In terms of where we may have resistance, you know, look, 1, 2, 3. If we do get a 5 down, that changes things and clarifies things for me substantially, because I've kind of said it for a while, but I think the Nikkei is the one to follow for the developed markets in terms of clues, if you will, on it. The tell, as they like to say, right? So that's where our eyes are on the Nikkei here in the near term. All right, now we can go to FX. I'm sure you're all very excited about that. But I do think it's important to look at the markets that you know, are really moving and are frankly kind of clarifying to me, right? Understanding where the short-term levels are that we need to be paying attention to. Okay, let's start with our favorite, US dollar. This old bastard right here, I mean, so for those that like to know where the longer term slopes come from, Marco says, thanks for getting rid of that noise. Marco, I have no idea what happened because I didn't do anything. But I'm happy that it's gone though. That's all I'm saying. So thankfully it's gone. I guess let me know if it comes back. But yes, if you're happy, then I'm happy. That's all I've got to say. All right. So again, this is our 2011, 2014 trend line. Okay. Now we're zooming in. Ty says the WD-40 worked. That's right, baby. It works on my chair and it works on my sliding glass door. All right, so we are trading around a super important level. I mean, we're right at it. We're 12,240. I mean, so really nothing is clarified here for me. You know, look, I'm looking for us to head lower. I don't think that's a secret, but at the same time, from a trading perspective, what am I just going to be short the dollar and, you know, hope it works? Not really, because that's how you get murdered. I mean, look, we've had 2 short dollar trades this week and they've gotten blown out. And thank God we had, you know, tight stops on it. I mean, Kiwi, you know, you have 20 pip stop, and if you didn't, you'd be screwed right now. So yes, I am looking for dollar to head lower. There's very little like room for this thing to go higher, because if it goes higher from here, I mean, you know, what are you looking at there? One, this whole bear slope's gone. And then you're looking at what? Like, you know, 12, 3, 70, 80. I mean, you know, very little room here for this to move on the upside, if, you know, if indeed we are in a bearish situation. So like the next fib, for example, we're gonna talk a little bit about fibs today. There's a lot of fibs that people don't look at. Marco says, are you bearish dollar even if yields do not drop? Well, look, I guess the good way to explain that is, one, I don't want to look at it as if this happens, that has to happen. Like lately on this run, right? So on this run from here on is really when yields started to accelerate. Like, first of all, the yield story and the dollar story do not always have to be the same, right? A lot of times they're not, but there are specific times when it's so damn obvious that you got to pay attention to it. And that's been like over the last week, right? We've seen yields really start to rip and the dollars rip at the same time. Notably, your yield sensitive pairs like dollar yen, right? And oil for that matter, right? Which, as I showed earlier, kind of the relationship between them. So there are times when I have to pay attention to it. But to answer your question, no. Even if yields do not drop, not necessarily. And let's keep in mind, look, even though I have this like bearish bias or whatever, when there's setups in the other direction, I'm fine taking them. I mean, look at what last week. What did we do? We got short pound dollar. That's a long dollar trade, right? So, and we took that down from 131.80 to basically 130 or 130.20, which is actually where we are now. So, I'm willing to trade the other side if there's a setup there. But so don't worry about that as much. But and I don't want to make a blanket statement like I'm just bearish the dollar like forever. But look, right here, big line, big level. If we do go higher from here, then your next level, frankly, is probably 12,393. Okay, that's a 786 retracement. For those that are like, what the hell is a 786 retracement? Okay, remember, if you take your 618, first of all, if you take 382, okay, and let's just make this fun and easy. Equals 382 square root is 618, right? Equals 618 square root is 786, okay? Equals 786 square root is 886, all right? 886 is also a fib. A lot of people don't pay attention to that one. It's actually going to come into play later in this webinar, okay? And bringing up this Excel sheet reminds me, I actually have something kind of crazy that I want to show you guys. And you have to promise me something. I don't want you to tell anybody this, okay? I don't want anyone to know this. I want to keep this between us, all right? So, capiche? Let's not show or tell anybody. Would be unfair for other people to see this. All right, so hold on while I put in the rest of the numbers. All right, so 8-1 close, 186.17. This just got me thinking on what's happening in the news. 185.75. 10-3 is 185.95. Okay, are you ready? So this is in blue is 1987, and that's when Bork. So they both start from the nomination. So Reagan nominated Bork on July, I think it was July 1st, 1987. Trump nominated Kavanaugh on July 11th, 1987. I think it was the 11th. Either way, these numbers are. So yes, it was July 1st and July 9th. Okay, so this is Bork, this is Kavanaugh. All right, and you can see this is just the price action matched up. So we've got Bork S&P and Kavanaugh S&P. Kind of crazy, right? So the funny thing is what happened on the day of 87 when Bork's nomination, when they had a vote and it was rejected, that was the day where the market started to break. A lot of people don't realize that. All right, so like I'm saying, please don't tell anybody this. I don't want anyone else to know this. I haven't heard anyone talk about this. I want to keep it to us. All right, that's all I'm saying. So look, is this going to play out? Probably not, but it sure as hell is interesting, and I think something that people aren't talking about that is good to keep in your mind, because if this continues to follow, like I've expected this to break and it really hasn't broken. we've continued to follow. So let's just say if we, where are the Qs trading right now? So if the Qs, we're trading 183.32. Let's just say that we do close right here, 183.32. All right, looking like this. It's still following it. All right. I mean, if this continues to go, then we essentially are going to have, now I'm getting kind of crazy, but we're going to have a vote on Kavanaugh on the 9th, which would be on Tuesday, and that would be here, and then they're going to reject him, even though everyone will think he gets confirmed. And by the way, this is not political for me. Like, I kind of hate the whole thing. I think it's ridiculous. I think there's other countries probably laughing at the U.S. About how absurd this whole thing is. But, you know, I don't care if he's confirmed or not confirmed. I'm just following this as a piece of analysis through historical context. Okay, that's it. So whatever, I'll keep you updated. You guys got to promise me not to tell anybody. All right, I never say stuff like that, you know that. But in this case, I want to keep it between us. All right. So anyway, that could be a very interesting find. All right, let's move on. Okay, so that was fun. I'm glad I remembered that because that's pretty cool. Moving on. So we had, where was I? I don't even know. I got lost in all the excitement. We were talking about the US dollar. So here we are. Let's go to a little short-term chart here, or shorter-term chart. So this is now, we are on a 4-hour chart. Look at a line chart. 1, 2. First of all, is this 1, 2, 3, 4, 5, or is this 1, 2, 3? Is this 4, and we're going higher in another one? Answer is I don't really know. If we go to a hourly chart and we start to see a 5 down or even 10-minute for that point, then maybe it's worth kind of turning more bearish. Old timer trader told me one time. He said, a lot of times at the end of a move, and a lot of people are especially looking for a 5, like a 5th, like for example, 1, 2, 3. This kind of looks like a 4, right? A lot of people you get what's called a stubby 4. So 1, 2, and then this is 3. This is your stubby 4. It's like not that big. It's just quick, and then you get the final blowout. Market's in a hurry to get finished with its with whatever's going on, and then it reverses, and it's actually the top. So, I can see that argument. I mean, if you want to get real cute with it, you could try to count the waves here too, like 1, 2, is this 3, 4, this is 5, and then this is 4 and 5. So point being, we're at the spot, a big spot. At the same time, it's not a blanket thing. We've got to take each currency, on its own accord, its own merits. So with that, we will move on to euro. All right, here's euro. Frankly, there's not much for me to say here that wasn't kind of thrown out yesterday, in the update. I still think that the 1411 area is really big. Parallel, as mentioned, it's the close of this day here on 8/10, which was a massive volume day, right? If I bring in the volume on that, you can see here. Let me see something real quick here. I'm sorry, I just got to check this. Okay. If we bring in the euro futures, okay, so this is what I'm getting at. You can see here, we've got 2018 starting here, right? This is that day. Okay, that is 8/10, and that close is 14 on spot. It's 14/10. Okay. Other bigger volume days, you got here, that's the low from 5/29. You can see that level, look across the chart, actually pretty big as support. You did spike below it a bunch, but on a daily closing basis, you actually never closed below it until 3 months later. And then you got a breakdown. Let's look at the other high volume days, right? This one, big high volume day. Oh, sorry, not there, over here, big high volume day, which was support until you broke down in April. Point being is that Ty's got a question here. Yeah, hold on, Ty. I'll go back to it at the end. I just want to get this, get through this here. Point being is that 1410 area is really big. Ty, are you talking about this chart, the Euro chart, the previous chart, or are you talking about the Bort-Kavanaugh thing? This one? Oh, okay. Yeah. Do you want it like this, or do you want me to zoom out? Let me know. Let me know when you're good. Okay, so here I will zoom out like kind of like this. Is that all right? Got it? Okay, great. All right, so 1410, again, big spot in Euro, okay? Now, if we think about what's been going on in Europe, in the news, Italy, blah, 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 blah. Look, we had a big DeMarc buy countdown back here on 8/15, okay? Not coincidentally, that is when Euro also bottomed, okay? We're gonna do a little bit of comparison analysis here. So we're gonna put Euro in a line chart. All right. There's Euro in blue, okay? Now, here's something else that's super interesting. Greece, which is going to trade like Euro in times like this. Guess what Greece just did? Greece just made a buy countdown today, or sorry, yesterday, at yesterday's close, a DeMarc buy countdown. And that's probably something we want to know because Euro has been trading like, you know, its southern, you know, partners, countries, right? So it's been trading like Italy, it's been trading like Greece and like Spain. And we're getting buy countdowns on these, and everyone freaking hates these things. I mean, like, you know, just they're getting destroyed. So to me, that's kind of a positive in terms of like from a contrarian. The contrarian in me says this could work out. All right, so that's all I'm saying. You know, look at some of the buy countdowns in Greece. Like here's a buy countdown. There was one over here. It didn't work that great, but the one before that was 2016. I'd say that worked out pretty well. So that's just, you know, that's a piece of information that's not necessarily direct to Euro because it's the only thing that matters there is the price of Euro and that we're looking for levels. But Pooja says, please explain the logic of the DeMarc countdown if possible. Whoa, there's a lot to it. I will tell you that, Pooja. It's not something that I have time to go into right now, but just because there's a ton of, I mean, it could take like 5 webinars just to do it. But what I will say is that it starts by, it triggers what you call a countdown. Okay. And in order to get a countdown, you have to have 9 consecutive closes below the close 4 days prior. So you get 9 days down, right? That triggers the buy countdown. And then you have to have 13 periods where you close below the low of 2 days prior, okay, but not necessarily in consecutive order. The point is it tries to identify exhaustion, and a lot of times it works pretty well. Like we had it on gold. I think we talked about this last week, and I'll get to that. So, but that's the quick and dirty on it. But again, there's a lot that goes into it. There's a ton that you can probably find just online about it. Ty, is euro nearing a buy on DeMark? No, it's not. The markets that are nearing buys on DeMark. Yeah, there's I'll tell you the best book to read is very quick and easy because DeMark's stuff himself is like a little dense. But it's the book's called DeMark Indicators, and it's by Jason Pearl, and his last name is Perl, and that's it. So silver is a couple days away, bonds are a couple days away, TLT is 2 days away, gold is 1 day away, but GLD already triggered. On sell countdowns, healthcare is 1 day away from a sell countdown. All right. So we need to get going. It's 10:36 and I'm only on euro. So let's zoom in. So look, you got a downtrend. Okay, got it. So my thinking here is I will wait until we get 114.10 before I'd probably want to buy euro, unless we get a clear. Tough for me to say if this is 5 up or not. Doesn't really compute here for me. But unless we get a higher low and start to work, basically start to not go down anymore. I mean, it's kind of that simple. So that's it. Eventually, I do think that you're going to see resistance up around this this parallel, which is now going to be 1670s, 1680s. But the levels to pay attention to: 1410, 1680s, 1607 month open. Okay, looking to buy down here. If you move higher before then, get up to this region, and maybe there's an opportunity to sell a little bit before looking for a higher low. But at the moment, there's really nothing for me to look at on euro. Okay, like right now. If we dump 100 pips tomorrow, then look for a low down here. Okay, British pound. This is a chart I just tweeted. Basically looking for a little bit of a pause here, right? 30, 40, 30, 50. That's the parallel that is just so pretty and beautiful that we did take a target on the short here last week. So we're able to catch this. And from here, I would be looking for support down here in the 2960s, right? Talked about the other day how cable has this tendency to like make you think it bottomed, and then it makes just a big false low, and then rips lower, tanks lower, and then goes higher, and then you're like, well, I got stopped out and I'm not in the trade anymore. This sucks. But look for support down here in the 2960s, right? That's the trend line. If I bring in the daily chart, I think it really brings home how constructive this could be, right? So here is our longer term fork, okay? Support on the median line, you gotta like that. And the 50-day average, right? Sometimes these just simple things like a 50-day average really keeps us looking at the right thing. And in this case, the 50-day average for a lot of this year has been a really good filter, right? I mean, it really has. So, you know, we're there. The 50-day average is about 29.70, which is kind of where I'd expect support anyway. So yeah, as far as a short dollar play is concerned, I really like the way that this might be setting up, or that this is setting up, and I'd be looking for that support around 29.65 or so, right? Understanding that you can probably pause up here, you know, the 30, 40, 30, 50 range, and then would look higher within this range. I'd be looking towards 31.50. Okay, that's just the 618 of this drop. Okay, that's saying certainly potential for something more constructive, but absent, you know, an obvious 5 up, 3 down pattern at this point, you might as well just stick with, you know, the levels within the range. Okay, so I like cable on a near-term basis at least, and maybe more. Let's see what the VIX is doing. VIX is 27.45, or VXX, I should say. Qs testing. S&P not quite there. Getting close. Remember the 288.30 region, or sorry, 288. What is it? 288.20. So we'll call it. Okay, moving on to, I don't want to spend much time here, but Kiwi, keep thinking that we've made a low in Kiwi and Aussie, and then it just gets murdered, but we've kept stops high, which is okay. Bottom line is pay attention to 64.50s. That is weekly reversal support. That is the close from this week back here in August of 2015. And that was the flash crash week, if you remember, in China and all that stuff. So that's 50 pips away. Pay attention to that level, okay? Aussie, kind of a mess here, but just continue to follow the channel. The bottom of the channel is going to be down near 69.70, which is the low from February 9th of 2016. It's also the 88.6 retracement. Remember when I said 88.6 was going to come in at some point? 88.6 is, again, the square root of 786, and that's your next fib. It's really the last one that I pay attention to in terms of any sort of respect for a level, but that's where I'd be looking. And dollar yen. Okay, so here's dollar yen. It's a chart from last night. Market rips to 114.58. I say that we're looking for a top probably near 1470, or maybe near 1470 and probably near 1550. And then of course the dollar yen retraces the whole thing 12 pips before it gets there. If I look at the short-term chart here, this is one where I think it might actually get a little more complicated. So like you might have we might actually form like a top here, you know, saying we're looking for maybe like a little head and shoulders top to trade. You know, you get a drop, come back a little bit for a short. This might be like a 1, 2. This is your 3 or 4. We're going to go down to these parallels, okay? Essentially, we're trading between close to 25 and 75 lines, okay? Your 25 line is going to be We'll make a magenta. So, you know, more or less, we did hit this level. I mean, we missed it by 12 pips. Okay, fine. But 1, 2, 3, look for a drop probably down towards the 113 area. And then maybe we go that final push up into 1550 at some point, and then it's all over for a much larger drop. Okay. So my head is right there now on the short side, right? Probably for 113 in dollar yen, but you can't be, you know, again, you can't be shorting into the median line. I mean, this is exactly what I'm talking about. Even though you've got the market getting destroyed right now, like, you know, risk. Look, Nikkei's down 515. It was down 480 early in the webinar. Remember? You know, S&P's down 24. It was down like 15 earlier. I mean, point being is that you can't just, no matter what's happening in other market, you cannot sell into support and buy into, you just can't do it. Every once in a while it'll work. You got really lucky. Okay, so you know, you need to see a drop below here. You come back to it, then look for resistance. Okay. In the meantime, you know, let's go to a 10-minute chart. You know, maybe 1410 resistance, maybe something like that. We're currently 1384. That could be something to look at. You know, you get that. You can see it on a 60-minute chart. If you do get a little more strength and a drop down to the median line, or even the short-term trend line 200-hour average is 1340, then you are going to have, you know, you're going to have potential for, you will have 5 waves down. Then you'll get the bounce, and then that would be really the short, right, around 1410. So it's playing out. We know that we got really close to major resistance, but we also know that this drop is probably just a 4th wave, because you need 5 up more than likely from the August 21st low. Doesn't mean it has to happen, right? But more than likely, that's how it will happen. So near term, fluid situation, but hopefully it clears up or plays out with 5 down here today, and then we can put in a sell order for Friday. Sorry, I have to hit the hiccups. All right, dollar CAD. Well, we're getting there, just about there, right? We want to see 2910. Okay, as resistance. And the other level I talked about was actually 2960. Hold on for a second. All right, well, we're getting close, so pay attention to 2910. Again, you've got the 200-hour average there. It's not shown on this chart, but you've got a parallel here. You've got the square root level. You've got the uncovered close, sorry, from last Friday. You know, if we're in a downtrend, we're trying to sell rallies in a downtrend. These are the 2 levels to pay attention to: 2910, 2960. Probably not selling right into it, but rather waiting for some sort of a sign, like, you know, you're going to get an hourly reversal or something, right? You do have, you know, a lot of risk tomorrow data-wise. Right, we've got CAD employment and NFP. So even if we are hitting our levels here today, I'm not so sure that I want to be putting on trades right in front of NFP. Right, wait for some things to happen or play it and then get out beforehand. I just don't like the idea of being in the trade right in front of it, at least not right here. Markets, there's a lot going on. There's no reason to just blindly gamble in front of a number. Okay, so those are our levels. Cable pulling back a little bit. Again, this is the one that's closest to me for a trade right now. Is probably the 2960s. I just love that daily chart. I love that 50-day average action. Mark on dollar Swiss. Oh, dollar Swiss and our friendship has been a bit hurt here. Why don't we? Here's what we'll do. I'll try to look at some dollar Swiss. Basically, I kind of threw dollar Swiss out the window after it didn't hold the level I was looking for it to hold. Essentially that trend line. I mean, if we do, so it's basically this right here, right? So naturally, 98.50 is probably going to be a level to pay attention to, top side of that line. And look at that. So other than that, I would watch this. So median line was hit. If you draw a channel, just a regular channel, starting with the 2016 high, right, from December of 2016. And this is, by the way, linear chart. I would probably so much as look at that. I would look right up there. I mean, daily reversal resistance, 10015, right? That might be the area. I suppose that if I were to say the two levels that I'd be most likely to trade on dollar Swiss on a swing basis, it's probably going to be 97.90 and 10015. Okay. I mean, you can kind of see how if you took out these highs right here, probably be like stop run, galore, right? I mean, just the stops get run like crazy. Everyone's like, well, screw this. And then it turns down. But those would be the levels I would pay attention to, Mark, for dollar Swiss on a swing basis, right? I do think things are quite extended here on a near-term basis. So, maybe we pull back relatively soon. I've got a square root level, for example, bring this in, the square root chart. I got a square root chart at 99.40, okay? You can see the low here at 98.542 on the square root level. Had a high here earlier in the year, all along this square root level at 10038. And remember, we were looking for support at 96 to buy this. Unfortunately, got a tiny pullback, 96.20. But yeah, 99.40 would be a really short-term level to pay attention to, Mark. And And the bigger level to pay attention to are these 97.90 and 100.15. All right. Thai, Euro, Yen, you got it. Let's take a look. So this was the chart from last night. This is the 4-hour chart, right? And this is a shift fork, okay? Meaning it's not, so a modified shift fork would be just when you have a trend line like this, right? A shift fork, what it does is it moves the axis halfway between, the median line goes halfway between the x-axis on the time, okay, and on the price. So really the level to pay attention to here, I think, is about 130.10, okay? You've got the low down here from 917. You do have the modified shift lower parallel. Again, the upper parallel was resistance. And if we go to the daily chart, down near there, you've got the longer term median line, right? The longer term median line is important, not so much because it itself has done a lot recently, although you have had some big moves off of it, including here 727 and including back here on 917, but also because look at the 25 line and how big that's been as resistance, or sorry, that's the 75 line within this channel, okay? And you do want to see it hold, because if it doesn't hold, that's when you get a bigger drop, like what happened back here in August, right? We didn't hold it, it dropped, you came back, found a resistance near it and tanked. So what I'm getting at is you do not want to get much below 130.10, okay? If you do, I think it's probably in trouble. You're probably headed back to 127.80. So my key advice or suggestion on Euro Yen is, look for a low down near 130.10. You need to see a good reversal down there. And if you do not, then I would abandon ship or look for little intraday bounces to short until you get to 128.20. Ty, can I keep an eye on this? I will do my best, my friend. I've got it right here. This is, for the most part, this is my workspace where I've got, the markets that I'm looking at on FX, which, as you can see, are basically the majors for the most part, and then usually one cross, and usually that's a yen cross, but right now it's Euro Yen. So yeah, I will do my best. All right, I've got to run. Thank you all very much for your time. Don't forget about the awesome Bort Kavanaugh thing. I will keep you updated on that. Please don't tell anybody. I want to keep it to us. I don't want it to get out. And yeah, there's that. Okay, so I will get this archived for you ASAP, and I will talk to you guys later. All right, have a great rest of your day and week.